We need to have a conversation about banking and banking influence in our country, how they pay for it, and what they're getting as returns. Everyone knows that the banking industry has overdraft fees, insufficient fund fees, and the like, so that they can take money from poor people for overdrawing their checking account. And the Consumer Financial Protection Bureau put out this article in April of last year talking about how the CFPB had gotten overdraft fees cut in half. Magical, right? 2023 down more than 50% versus pre-pandemic levels, saving consumers over $6 billion. Wow, they did a great job. Overdraft fees, they saved $6 billion. But that's not the worst thing banks do. Let me tell you about the hidden tax that's in almost every transaction in this country: swipe fees. Here's an article from the Motley Fool. Average credit card processing fees and costs in 2025. Record processing fees. In 2024, U.S. credit card companies earned $148.5 billion from merchant swipe fees, costing American families $1,200 a year. Fee variability. Credit card processing fees range from 1.1%, negotiated lower by bigger merchants, to 3.15% per transaction, influenced by card type, merchant category, critically, and the payment network. Consumer impact. Merchants may pass swipe fees to consumers through surcharges or higher prices, with debates on fee limitations ongoing. Here's an article from the Merchant Payments Coalition. Credit and debit card swipe fees hit new record high. They quote $187.2 billion, driving up prices for American families. Talks about all of the same things. Here is essentially an advertisement article from SwipeSum, the true cost of credit card processing in 2025, a merchant's guide. Now, they offer a subscription service so that you can use their service to swipe cards, and you'll reduce your merchant fees because they're processing a larger quantity. They can negotiate better deals, similar to what larger retailers are able to negotiate. But not every small business can pay a subscription fee just to save on swipe fees. Same story, January of this year, Inc., how credit card swipe fees became the third largest expense for many small businesses. Processing card transactions cost merchants billions each year and will likely rise as legal efforts and legislation to rein in those charges falter. And from February of 2023, CNBC pointed it out as well, how small businesses are fighting inflated credit card swipe fees. Credit card swipe fees have more than doubled over the last decade, leading some business owners to look for new and creative ways to claw back their profits. Main Street businesses across the country are increasingly struggling with changing macroeconomic conditions. Visa and MasterCard control 80% of the market, but a proposal in Washington seeks to force greater competition. And again, this is from February of 2023. That legislation hasn't quite made it to the floor, or for that matter, to the president's desk yet. And here's one from just 2 months ago from the Minnesota Post. Swipe fees are squeezing small businesses and consumers. Free market suffers when Visa and MasterCard dominate. The Credit Card Competition Act is a needed remedy, and I don't see anyone out there talking about that either. The National Foundation of Independent Businesses, they put out an op-ed as well. Our take: the message is clear. The hidden fees hurt small businesses the most, keep them from hiring more employees and growing their businesses. They make it harder for them to keep prices low and keep them from contributing more to their communities. And in an increasing number of cases, swipe fees threaten the ability of small businesses to even keep their doors open. And why do I keep harping on about small businesses? Clearly, payments. Can large merchants negotiate lower processing rates? I've already discussed. They absolutely can, and they do, which is a net negative to small businesses because small businesses are losing profitability. And what are banks doing with all of that money that they're taking from us? Federal lobbying set new record in 2024. Lobbyists reported almost $37 billion in combined federal spending since 2015. Last year alone was $4.4 billion, and you can see it's been increasing every year. And let's talk specifically about commercial banks lobbying. And you can see here, lobbying alone, they spent $57 million in lobbying. And that doesn't include campaign contributions, which were about $70 million last year to political candidates across the political spectrum for federal office. So for the low cost of, let's say, $120 million, they kept in place the system that's netting them $160 to $180 billion a year. That is an amazing return on investment. And that is the problem. So how can we fix it, you say? USDA put this memo out in 1994, so 30 years ago. They were issuing cards, getting buy-in in the market to have a card issued by the federal government that could be used utilizing the structures that were already in place for everyone else's plastic cards. And over the last 30 years, it's gotten to the point where that's just the way of doing business. An EBT card can be used just about anywhere. That infrastructure is already in place. They've had 30 years of practice, but EBT cards don't make it a bank. And that's where the campaign for postal banking comes in. They've been around for about a decade and they've been pushing for postal banking. If you look back at history from 1911 to 1967, the post offices were allowed to do basic banking services for citizens. Think of money orders or wire transfers internationally, whatnot. They were able to do basic services. What if we ramped that up to 11? What if instead of just allowing them to do basic banking services, allow them to do banking services? Everyone who opts in, and this isn't forcing anyone to have a government credit card, but everyone who opts in has the ability to bank at one of the 31,000 locations in every zip code in the United States, because every zip code has a post office. You can go to your post office and do basic banking needs. And you eliminate the fees, the minimum balances, the overdraft fees, and critically, by shifting to the EBT, which is already issued for fund settlement through the Treasury, we can start to claw back some of that money that's going into swipe fees that the big banks are just taking for themselves. And by their statistics, nearly 28% of US households, or 100 million people, don't have access to affordable financial services. For many, traditional banks are out of reach either geographically or due to high fees or other obstacles to opening, maintaining, and accessing accounts. Every American who opts in can have one of these accounts. People who aren't able to get normal banking can have one of these accounts. And the Treasury can also set it up so that anyone who's a cardholder or a member of the bank can have a savings account. That savings account would allow the direct purchase of short-term treasuries, buy and pay that interest directly to Americans. Right now, when you put your deposit in a bank, they hold on to that money and they give you 0.5% maybe on your checking, maybe 1%, maybe a little bit more on your savings account. Well, what they are doing is ripping you off with every dollar that you have sitting in that bank. Because what they do is they'll go off and buy these treasuries or similar instruments, and they will earn 4% or north of that and give you 0.5% and tell you that you're getting some kind of a good deal because you have an interest rate in your checking account, when in fact they're making money by your money sitting in their bank. So we're allowing banks to buy up our debt, and we as taxpayers are paying them interest. Why don't we flip the script on that and pay ourselves that interest instead? So to make it crystal clear and to sum all of this up, this is not some mechanism by which I think we should eliminate banking entirely. It is a mechanism by which we should get banking back to doing normal banking things, providing loans so that we can grow our economy, instead of leeching off of our economy with this hidden tax of swipe fees, overdraft fees, and the like. All we are doing is getting them back to what banks should be doing. And if we defang the biggest of banks, we also defang the Fed just a little bit, because we take that power back to ourselves through Treasury instant financing, through Treasury-backed savings accounts, through reduced fees with the EBT cards. We're just taking back what's ours instead of allowing it to be stolen. If you have any questions, any pushback, any criticisms, let me know. I'm looking forward to your feedback. Have a great day.